Okay, peeps, welcome back. So, we're going to be going over the portfolios today and more or less what the thought process is behind everything that we're doing. So, with that being said, let's get it. Okay, so we're going to talk a little bit about the portfolio positions, what we're planning on doing, and basically what we may. Again, there's no guarantees on any of this. Okay, we're not saying anything for certain, but what we may or may not be getting out of, and the reasons why, and kind of what we expect going forward in the future. So let's get into the content. All right, so the first thing I'm actually going to start with here is the Grayscale Trust portfolio. So basically, the positions here, and I know we don't show this every day, but guys, if there was a change, we would tell you. Okay, we're not just going to be like, oh yeah. I mean, of course, I have a busy schedule and stuff, so there may be some days where I may not necessarily be able to show you the same day. But rest assured, we're not just going to, basically just drop a huge amount of money on one of these one day and then for like a whole month or 6 months or a year or something like that, not say anything and then, get out a profit. I mean, of course, look, the reality is we never even had to create this channel. So even if we were making these moves and we never made this channel, you guys wouldn't have known anyways, right? So, um, anyways, in short, pretty much what I'm thinking here is we may or may not get back into the Grayscale Trust before the end of the bull run, but regardless of whether we do or don't, we're still going to cover the content for you guys anyways, because that's what we said we would do. We're going to do as much as we can anyways. I don't think the bull run's over. Look, I think the Fed's going to cut rates, and I think when they do, the dollar's going to fall, the yields are going to fall. Everything that's cash equivalent related is going to fall, and the people who, the whales and the big institutions and all that stuff, they're going to move that money out of cash and cash equivalents into risk on assets like crypto and Bitcoin and the Grayscale trusts and the Bitcoin miners and anything crypto related and stocks. That's exactly what I think is going to happen. I mean, there's a risk. There is a risk, of course. There's always a risk with the economic uncertainty of a recession and the markets have a substantial dump and stuff like that. But I would say that the possibility of a recession and the market dumping, in my opinion, is a low probability scenario at this point. I would say the higher probability scenario is that we continue to move up. It doesn't mean we can't have pullbacks along the way, but we just had one. So I think we're not going to have one again for a while. Of course, there is still the September seasonality. So I've already told you guys I think the markets are going up in September, or if we do have a pullback, it's going to be very, very shallow. I don't think it's going to be a huge one. So whether we get back into the Grayscale Trust or not, it kind of depends on, if the markets react favorably to the rate cuts, which we're still looking out for to kind of see how the markets react to that, we may go ahead and get back in. It also depends on capital allocation too. We have a certain amount of capital that we work with, and we really want to make sure we're being smart with our money, because these markets always move all the time in all different directions. And so we're trying to currently create more capital, build more capital to be able to allocate stuff to stuff like this. But we also have to be mindful of the possibility of the Fed losing control of the economy and stuff like that. I don't think they're going to, but again, there is always that risk. So in terms of native crypto, we'll go over that one next. So we haven't really added anything to any of these positions. We're just simply waiting for them to go back up into a profit to get out. Now, I do want to say that I think a lot of these positions can actually do a 5 to 10x easily, even from our average cost basis on these, which the current prices are down from our average cost basis on a lot of these. As a matter of fact, I think all of these are actually under our cost basis, so we're pretty much underwater in every single one of these. But the only one we've really been added to heavily is Filecoin. We're probably going to add to some of these other ones as well before the end of the year, because again, the end of the year theoretically is when the bull run should begin to kick off, somewhere between roughly about November to December timeframe. So usually we do this on the weekend, but I just wanted to show you guys midweek, or I guess in this case you would see this on Friday, but again, this is before Jackson Hole. So as you guys can see, basically the recording date today, 21st, we have picked up some Filecoin. And then, of course, you have the 20th. again on the 20th, and I can keep going back in time here, but you guys have already seen this before. So 19th, 18th, we bought $100 worth there. 18th again, keep going back. 17th, so you guys can kind of see what's going on here with Filecoin. So basically, the current price is 381. Our average price on Filecoin is 683. So we're actually still down like 40% on this position. So for those of you guys that are down on your positions, do not feel bad because we're experiencing the same thing. Okay. Um, but what I will say about Filecoin that in my opinion is bullish, we're sitting at the bear market lows. As you guys can see, this usually is pretty much about the level the Filecoin has bottomed out every time it has bottomed out in its past history. The upside here is absolutely monumental. The previous all-time high was $237. Current price is only $3.80. So, do the math. But the other thing I want to point out is there is a potential for a weekly golden cross on the RSI, which is extremely bullish, and the MACD histogram is turning that slight shade of red, which indicates maybe potentially we might be going into a bull trend here soon. Every single time we've gotten a golden cross on the RSI, as far as I can see, it has led to further upside in the price of Filecoin. So, but we're looking for the big move. We're not looking for a small move here. We're looking for like probably I'd say $100 to $150 on Filecoin at least. I would say that's pretty realistic. So now going over to the portfolios, I will say we did plan on doing, and we do still plan on doing NVDL cash secured puts and covered calls. As you guys know, a subscriber did mention this to us, and it is roughly about half the price of NVIDIA, and it's 2x leverage, I believe, if I'm not mistaken. And the premiums are pretty good. I can actually show you guys that right now. So NVDL, we'll go over this. So it's a 2x long. You can see the current price. I believe our strike price for the cash secured put is $65.50, if I'm not mistaken. Earnings are next week, so the premiums are going to be absolutely insane for that. Of course, the volatility will be too, but you guys can see here if I were to pick a relatively, let's say a safe delta, because of course, volatility is really insane when it is, especially during earnings. I mean, that's a lot of people say don't do options during earnings. But I guess we got cojones of steel because we probably will be doing it during earnings week. No guarantees, but we're thinking about it. So you can see $300 here just for 1 week for cash secured put at roughly about a 30 delta. And on the flip side for a sell call, see if I can find the 30 delta here. Or not a sell call, I mean a sell put. That's what I meant to say. So $430 in premium, roughly about a $62 strike price. However, okay, even though we plan on doing this for premiums every single week, week in, week out, and of course, we're very bullish on NVIDIA long term. Otherwise, we would not have a massive position in NVIDIA, and we also would not have doubled down with NVDL as well. I will say this, we're probably going to close this position by the time you guys see this video, or before you see this video, at least at a partial profit. As you guys can see, the premium here, 143. So if I close this now, it would cost us 110. So we'd basically walk away with about $30 in premium. We're probably going to close this before Friday because the last two Jackson holes have led to pullbacks in the market. Okay. And we don't know what Powell's going to say. He could come out and say something really hawkish and tank the markets, or he could come out and say something really dovish and the markets just start ripping to new all-time highs. We don't know. Okay, but we would rather not take the risk in getting caught at the top, so to speak, or the local top, which I don't think is going to be the local top, but it's a 50-50 chance with the Fed. We just don't know what the Fed's going to do. So we're probably going to close NVDL before Friday and then reconsider getting back in on Monday once we've kind of I would say gotten a feel for what how the market's going to react between the open and the close on Friday is what I'm trying to say here. So in terms of these other positions, we did get out of SQY. So we've been adding to TSLP. Okay, we've been adding to TSLP. We have also added to, let's see, where is it? AIPI here. We basically took the money that we got out of SQY, added it to AIPI. Unfortunately, we thought we were going to get out at a slight loss, like maybe a very small amount, like $20, $30, but it opened up much lower. So we took a $200 loss. Again, we'll use that for tax loss harvesting, not too worried about it. The dividends will make up for that in no time, but we added a massive amount to AIPI. Want to get up to that 100 shares like FEPI, and so that's what we're doing here. We may get out of some of these single stock yield max ETFs, not because we're not bullish on them. We kind of just want to concentrate down and not have so many positions to manage all at once, because it is kind of a lot, if I'm being honest. But yeah, so you can see the number changed here. We have 72 shares of TSLP. We just went over what the dividends are for that. Probably going to continue to hold YMAX and YMAG. I'm sure a lot of people probably freaked out and sold when we had that crazy flash crash. And I'll be honest with y'all, my stomach kind of turned a little bit when I saw how much the portfolio went down. I was like, holy crap, what the hell is going on? So hasn't quite recovered yet fully, but as you guys know, they did just pay a dividend. So there's plenty of time for this thing to recover before the next ex-dividend date and the next payment on those dividends. And of course, YMAX, same thing. I did notice that these funds do tend to move substantial amounts in the after hours. I don't know if whales are like loading up during that time frame or what's going on, but you can see we're only down 10% here. So even though there was a flash crash on YMAX and YMAG, it is actually still holding up pretty well. I'm quite surprised. So in terms of Coney and MSTY, we're still bullish, I would say, on Coney and MSTY over the next 12 to 15 months, assuming that everything remains good in the economy and the markets, which I think it will. But you can see even still we're down quite substantially. So 35% on Coney. And then MSTY, which is much more volatile than Coinbase in my opinion, and because it is strictly a Bitcoin related stock and not necessarily crypto related like Coinbase, this thing probably is going to recover much faster because, as you guys know, Bitcoin is the market mover, so only down at this point roughly about 20% on this position. But before the end of the bull run, we will be getting out of Coney and MSTY. I mean, yeah, sure, okay, the gold ETF. After it got approved, the first one, gold went up for 7 years straight. So sure, could these continue to go up, Coney and MSTY long term? Absolutely, they could. But we've seen the cycles. We've been a participant in one of these 4-year cycles. We just are not fully convinced yet that there is a long-term trend here. So we're just going to treat it like a cycle as of now, and probably likely get out of these before the end of the bull run, sometime towards the end of next year. We're probably thinking about keeping AMZ. We may kind of average down on GUI and MRNY and eventually get out of these. Same thing with OARC as well. Kind of just condense the portfolio a little bit. Probably going to keep NVDY because, again, NVIDIA, we're very, very, very bullish on long term. Tesla, we probably also will end up keeping that one. SoundHound, we would like to add more shares with this, but we kind of have a different idea at the moment. We're considering getting out of SoundHound. Not that we're not long-term bullish on it. We are very long-term bullish on it, but we have some other stuff we want to try to do in the meantime, and then kind of circle back around and slowly get back into SoundHound. Mara and CLSK, we're getting out of these ones immediately as soon as they're back in profit, because the thing about crypto that you got to understand, okay? It's impossible to know when the top is. I can tell you all right now, been doing this for a long time, spent plenty of time studying these crypto cycles. Even I cannot time the top exactly perfectly on these cycles. It's very hard to know, especially now that Bitcoin's hit all-time highs before the halving even took place. That's never happened. So in my mind, it's better to lock in some profit than to lock in none and be forced to go through an 80 to 90% drawdown during the crypto bear winter, which again is not, if the 4-year cycle remains true, that's not going to happen until, we expect it not to happen until 2026 or thereabouts. So you can see we're currently down 26% on this, even with the massive pop on Mara recently. So you can understand why we want to get out of it. Now, what we more or less plan on doing with the funds from Mara and CLSK is getting into NVIDIA. So we want to get our options portfolio beefed up, okay? So we eventually want to move So what we want to do is we want to move. You can see negative 47% here. It's absolutely ridiculous. So we're experiencing this too, just so y'all know. But we want to move the money from anything crypto related, okay, in this portfolio out of it and into traditional stocks before the crypto winter, and then beef up our options portfolio so that way we kind of have like a 50-50 mix of options on the Mag 7 or similar stocks that we think are going to go up long term, and also 50% in dividend paying stocks during the crypto winter. Wait for the bear market bottom and then start to reaccumulate crypto as that time frame approaches. So eventually we do want to move. We've already gotten out of Palantir and SoFi. We may end up getting back into those. There are reasons for that, but eventually we were going to get out of those anyways and basically move into higher priced, better premium paying options stocks like Nvidia, for example, or Tesla, or maybe even the Nasdaq or the S&P or something like that, or something up there in the several $100 range. We eventually want to get into that level, so we're kind of scaling into that arena slowly, so to speak. QDT and XDT has performed extremely well. We do intend to hold those. I would say likely long term. The thing I want to point out about these, I'm not sure how many people have noticed this, but even though they had a crazy dump here, okay? So it went from 46 all the way down to $40, which is absolutely insane. You guys can see it's recovered nearly half the move already. So the sharp recovery tells me that this thing has the potential to maintain and even grow its price appreciation over time. And also very similar things with the FEPI and AIPI ETFs. So if we take a look at these as well, you guys can see that basically since that crazy flash crash we had, it has not completely recovered yet. You can see it went down $9, but it's also gone up $5. So there is a potential here for this thing to recover and even go back to new all-time highs. But even if the stock just remained flat, or the ETF would remain flat, which I don't think is going to happen, because in theory it should move up with the markets, right? It still pays roughly about a 25% dividend yield. So even worst case scenario, if the share price was flat and the yield still paid 25%, that's still a 25% total return. So that's, I think that's pretty bullish. But again, I do expect the share prices to move up. So Palantir has moved up since we got out. I mean, it is what it is. Now, in terms of some of these other ones, we still have Robinhood. May get out of that also to get into some higher priced plays for options premiums, basically. So TMF, we're still going to continue to basically add little by little to that. I'm thinking likely that's going to be a little bit longer term play, like 6, 12, maybe 18 months. As the Fed cuts rates, we expect the price of that to go up. AMC, this thing really hasn't done much. But again, I think likely AMC is going to have its biggest move to the upside kind of towards the end of this year, because that's the last time the bull run happened on GameStop and AMC was kind of during the crypto bull run. So roughly around end of 2024, beginning of 2025 to the middle of 2025, somewhere in there is when we saw it happen. So we're pretty much getting close to that time frame now as well. As you guys can see, it's kind of consolidating here. It's coiling, which tells me that there likely is going to be a big move at some point. When exactly, I don't know, but that's usually what happens when these moves coil. So the price target for AMC that I'm looking for at a minimum is, again, at those gaps. And if I go over to the gaps here, I can show you guys real quick before we close out this video. So I think, if I'm not mistaken, I actually have to go down to the daily time frame to see this with y'all. Yes, so here it is. So here are these glaringly obvious gaps, okay? So I'll give you guys an example of another gap that we had back here. Okay, so you see this gap here? Gap down, right? What did it do? Came back up and filled it, and then boom, took off to the upside, okay? So I am expecting something similar to happen here. We gap down, went back up and filled it, and then went to the upside. So what do we do here? We gap down, didn't quite go back up and fill it, went down further. if AMC is to move up in sync with crypto, which I expect is probably likely going to happen, we will. This is not a guarantee, but I think it's very likely we're going to fill these gaps. So we're looking at this as price targets, roughly about 1650 to 1950, 3650 to 43. It could go much higher than that. I mean, it could go up to, I mean, anything's possible. $100, $200, $300. I mean, the thing went to $400 at the peak of the last cycle, so that should tell you it's possible. If I were just to give you guys some numbers on what we're looking at here, so 43 as we'll say that's the maximum price target. So 6.5x roughly times the amount that we have put in. You can see what the return would be here. So we think that's a pretty good bet, in my opinion. So, anyways, this is kind of the middle of the week portfolio update and what we are getting into, what our plans are. The other thing I also wanted to point out here, I don't know if you guys noticed this. We did talk about this before, but we do also plan on getting into these ones as well. We have some orders set in here for 1 share each of the GPIC and GPICs. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and I'll see y'all later. Peace.